He expected, of course, a rate hike today, but many did, of course, up until about, 24 hours ago. They see 2 additional rate hikes in 2022. Andre, good morning.
Morning.
So we're speaking with Adrian Orr on Friday. What do you think we should ask him?
Oh, quite a lot of things, but why did he blink? Is the first question. And is this just a temporary pause for inevitably tightening? Already the guidance is yes, but it just shows you how sensitive in the region of Asia generally, not just New Zealand, in terms of the difference between 0 cases, in terms of maintaining 0 cases or mitigating some outbreaks. In the case of Australia, New Zealand, China, there's a clear skew towards the 0 cases.
You're still thinking they can hike additional hikes, I guess, in the later part of this year. Is that going to change, do you think, that forecast? I mean, at this point, they're saying that this COVID outbreak could lead to about 120 people that are infected, according to their models.
Yeah, of course, inevitably this is uncertain, but in terms of the economic impact. But before this, I mean, we've seen quite a long, strong, data that suggests that employment conditions back to pre-pandemic. Housing market, is it going to change dramatically? Indeed, the words unsustainable was in the last meeting prior to this. That's still an issue. So it seems to be a delay rather than postponement for quite a while.
Shorts, whatever, against the Kiwi was kind of the play. It seemed like it was a one-way bet for so long now. Do you think that it's time to reduce your exposure to some of these pairings, or do you think that those calls still stick?
Well, I'll leave that for my currency colleagues, but I think in terms of the
rates market, too.
Sure, when the rates market, it's about the interest rate differential that's driven that, and undoubtedly I suspect, I haven't seen the latest pricing, but the market will price out 2 rate rises for the rest of the year and be just 1. But I still think there will be an indication that RBNZ will be leading the pack in terms of policy tightening. That hasn't really changed. So when we compare it to the Fed, compare it to the Bank of England, compare it to Bank of Canada, etc., RBNZ is still likely to be ahead of the curve relative to the rest.
The big fear, and I was looking at some chatter yesterday in the midst of this repricing going on in New Zealand. Of course, that's COVID zero strategy, ground zero pretty much.
Yeah.
Is that sort of rethinking and repricing suddenly takes place in other places that have flagged with raising rates, like the Fed, like the UK, for example. Is it safe to say that this repricing, that possibility of us rethinking the path of those rates, is that a tail risk for now, or at least not even a risk at all to consider, given their own COVID strategies?
Well, yeah, it's very difficult to compare like for like. So, for example, the vaccination rates in New Zealand are relatively low, but of course they've got a zero COVID-19 case policy. But if you look, for example, just within the region of Asia, look at Bank of Korea. There was a split dissenting vote for a tightening, 1 in terms of favour of hike versus 7 unchanged, and they still have the problems of COVID-19. BOT, completely opposite in that regard. Low vaccination rates and a split vote for an easing. So I think it's very difficult to compare New Zealand for the rest, especially the other major economies where high vaccination rates. I still think there's policy normalisation likely to occur over coming months.
I wanted to talk about our other top story, which is Huarong. It seems like there is some sort of resolution right now. Do you think that this reversal that we've seen when it comes to the high-yield bond market in China, is that something that can continue? And does that mean, in terms of Asia dollar bonds, they can actually rally now too?
Well, my colleagues covering credit do think that this is becoming an opportunity, and it's not just about a China view, it's also about dollar in terms of treasury yields remaining fairly pinned down. And we don't think the sort of regulatory risk is going to be at premiums is sustainable. So yes, but having said that, in my world, in terms of CGBs, you're still going to likely have this safe haven status reinforcing it, because it's not going to go away completely in our minds.
The Bank of Thailand, in fact, the Monetary Policy Committee just coming out right now in the minutes of their meeting, and in a lot of ways, they're stating the obvious, really, that they've taken some steps, really, to I guess, provide some shelter to the economy there. In terms of your preference, then, where you want to be in the rates market, you still prefer low yielders in EM, apart from Russia?
That's actually right. It sounds a bit odd.
Yeah,
but
that's what I wanted to clarify.
But let me just reverse engineer that in terms of Russia. Why Russia? Actually, it's already largely done, if not completed, its policy normalisation. So it's odd that we're talking about, when and if New Zealand will raise rates and the others. But Russia has already raised rates 225 basis points and completely normalised. So that's the reason. But for the rest, in terms of low-yielding markets, yes, we still favour the likes of China, Korea, these markets and Malaysia too, that are either on pause or actually having an easing bias. Again, very different from what we're seeing in terms of the global narrative.
China, from the last time that we spoke, we've had a bond rally, of course, taken the 10-year to about sub
Huge rally, yeah.
2.9%. They've
Yeah.
changed their stance right now.
Yeah.
How does that change the equation? Well, what's the key takeaway for you guys there?
Well, since we last spoke, we were still bullish and remain bullish on China bonds, but we're a little bit wary of how much stimulus is coming. It's not going to be a 180-degree turn where we see dramatic easing. If that was the case, then you talk about re-stimulus in the economy. No. We still see a deceleration in growth in the second half of this year. We still see targeted RRR cuts, 2 coming.
This year?
This year.
Okay.
Well, actually, yes, largely this year. And then some liquidity provisions, but not policy rate cuts, whether that be LPR, etc. If that was the case, then we were a little bit more concerned. But so it's just supporting the economy in terms of deceleration rather than significant boost of stimulus. So it's long China rates in particular duration remains unchanged.